Hello, traders. Gary Wagner with the Gold Forecast. Incredible day right now. It is the 9th day of November. It is Tuesday. This is the daily report. We've got gold trading up currently about $13 to $14 higher. The dollar itself again is strengthening. It's roughly unchanged, but it's down about $3.40 when you add that to the price of gold. Add another $17 from predominant buying, and you will see that we are at this 1422. 1423. On today's report, I'm going to talk to you about, obviously, a revised upside target. I did do a commentary for Kitco this morning, and the upside target that I'm calling for is 1488. I'm going to show you how we came to that conclusion. We'll also talk about raising some stops. Of course, we're long at 1340, 1345, all on today's daily report. Traders, this is a 60-minute candlestick chart on cash gold that we're looking at right now. And of course, as we can see, we've got this beautiful, slow, methodical move all the way up. And you can see this is that 1325, the low. We have the market move up and spike. It then does trade in that, what I call those channels, or a sideways trading band. But you can see that overall, the market has been moving up extremely strongly here this morning. Now, when we take a look at our daily chart, as I said, an utter breakout to the upside. What we are witnessing fundamentally is the fact that what we used to talk about as really priority one, which was the credit and debt structure that we had over in the European Union, Portugal, Ireland, a couple countries have come back into the mix again. That has put some incredible pressure on the euro dollar. The selling of the euro dollar, of course, is strengthening the US dollar a little bit, but more becoming, again, that safe haven to move a lot of money, I believe, personally, primarily euro dollar money, into the gold market right now. So, updated analysis. The 1421, obviously, I'm very glad that we hit that. My sentiment right now is that the market's probably going to head a lot higher than that. And so what I've done is basically we're looking at here this wave one, and on a typical market in terms of a wave count, you'll typically get wave number 3 to be roughly 1.61 times that of wave 1, and then wave 5 is usually equal to wave 1. Now, when we took a look at this activity here, wave 3 actually came out to 1.42 times that of wave 1, so fairly close, but actually it came in a little bit under what we would typically have. However, if we take a look at the potential, of course, this is the potential of wave 5 to be an extended rally and to take us, as you can see here, to 1.61 times that of wave 1. That's going to take us to 1488. Now, 1488 I find is an interesting number because if you recall, I had mentioned a very, very good friend of mine that I highly respect in terms of his Elliott wave countability, and he came up using the longer term weekly charts with this 1488 with a completely different math formula, but came up with that same conclusion and came up with it actually about a week and a half ago. I did look at that data. I did think that it was not only interesting but plausible, but traders, the numbers that I use are always going to be numbers that I come up with. I'm going to live or die by these calls, so I want these calls to be mine. And this is how I'm coming up with the number right now. So I absolutely think that 1488 is a distinct possibility, and that is my new upside target for wave 5 in gold. Now, with this new upside target, absolutely comes a little bit of risk. And here's what I'm looking at also. I believe right now there is a distinct possibility that This final wave could be what I'll call a more complex wave. These waves 1 and 2 were really simple waves. I would find it hard pressed to be able to do a 5 count on this wave as we have on other waves. And what I mean by a 5 count or a 3 count is typically in a marketplace itself, you'll get a 3 or 5 wave count, smaller wave count within the waves. If you take a look, for example, this is that first wave right in here. And if we take a look at it actually in detail, what I'm going to do is let me change the color of the pointer and kind of change the width so we get an idea. But it's not simply a straight move up. In other words, the market moved up to this high, it then moved down, and then moved up. That is what would be called a 3 count. Or on wave 2 that came down, again, you can make the case that there were what I call sub-waves within these waves. And so here's a 3 count. Again, here in wave 3, it's not simply a simple straight up linear move up, but rather what I call a complex wave, or what is called a complex wave. Now, my sentiment is that it is highly probable, because of the nature of this market right now, that this market does take off, find some resistance, and I'm not sure where that resistance is going to be, retrace a little bit, move back higher, retrace a little bit, and then reach its final goal. In other words, if this market had a complex structure, it certainly wouldn't surprise me. At the same time, where do we look for these points? Well, we're going to have to look with candlesticks. We're at, of course, record all-time tops, and whenever we're at record and all-time tops, if we use any of the stochastics and other momentum indicators, the stochastics, the oscillators are always going to tell us that right now we're overbought, so they're not going to give us the information that we need. We really need to look at these Fibonacci extensions here. We need to look at candlesticks to see if we see any weakening. Do we see weakening right now? No. We absolutely see a runaway market that is full of strength, full of vigor. Now, I'm not sure if this print that I'm looking at on a daily chart is real. I do not believe that it is. In any case, we have our stops at 1378, so just below here, and you can see why I've put them at 1378. Let's go ahead, leave them at 1378. This has just been an awesome, awesome trading day. Of course, we're long close to $80, getting near $100 from this point. We will talk tomorrow about adding, though, or scaling onto these positions. We've scaled on a couple of times, so I think that you should have a nice sizable position that's running deeply in profits at this point, but that is something that we can talk about. Another thing that we might want to talk about is, as I talk to my subscriber base, I learn some of their strategies that they've been implementing, and one gentleman has been trading this market, taking my advice with absolutely no stops in the market, trading gold, trading silver, as he put it, riding it all the way up, and he's utilizing options, put options, to protect or hedge him against a potential retracement or correction. And that's something that we might want to explore in the next coming days. This has been a great start to the week. We'll see what happens over time. As I say, the market right now is strong. It does want to trade higher. We're long $80 from here, so we're certainly happy. Let's see how and what develops over this week. This has been Gary Wagner with the Gold Forecast, wishing you, as always, good trading, and we'll talk to you tomorrow. Bye-bye.